Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Vakil. The top headlines. Weakness continues in the October series and India wicks advances, but we also see fresh shots in Just Dial even as open interest surges in stock futures while the stock continues to fall. Yes Bank continues to be the top loser on the Nifty even after the management denies evergreening of loans. Another player from the Indian railway space, Biocon, makes its debut on the boss's list at a discount price of 410. And the GST Council may bring down the tax rate on cement at its meet today. Also on the agenda is hiking cess on luxury cars to fund rehabilitation after natural calamities.
Okay. Let's see what the cues are indicating at this point of time. It's a weak start for the new series, not at least on the benchmark indices. They've come off the highs of the day, but look at the carnage that's seen in some of the mid caps and the small cap end of the market. So there is evident weakness that we are seeing after the big, positive cues we got from the SGX Nifty. There is selling, absolutely more selling coming in on the mid cap and the small cap end of the market. Now, if you're looking at it, 11,000 still continues to be the big support that the market even is banking on at this level, even though the Nifty probably is trading just up slightly above that level. So if you're looking at it, 11,000 put has seen almost 27 lakh shares open interest, and the 10,800 put has seen that much similar amount of open interest. Call writers are aggressive at levels of 11,000 to 11,200 in trade today. If we can bring up where positions are being taken, so you can see it's call writers all the way. Put writers still continue to write in at the 11,000 level, but from 11,000 to 11,300, 400, call writers are much more aggressive in change today. There is select buying that's seen among the FMCG and oil stock, but as of now, it seems that, while the Nifty is being managed by buying in certain stocks, on the broader market, there seems to be more selling. But Agam, on the stock specific side, anything you're spotting?
Right, Darshan, there are actually a lot of stocks. Perhaps, unfortunately, for those who are longs in the markets, a lot of these stocks are taking quite a hit in today's day of trade. Let's pull up that list then. We have Just Dial, which is right at the top, and that's seeing shorts. Though the cuts are not as deep here, we are seeing shorts considering the stock is down as much as 2%. Canfin Homes, well, perhaps one of the few stocks which are in the green, few and far between. That's up 6.3%. That's seen about a 21% increase in OI. So longs there. But other than that, we really don't have too much to speak for. Jubilant FoodWorks is the other exception in today's day of trade, which is seeing a 1% up move. But KPIT Technologies, I'm going to talk about this in a little later. That's seeing fresh shorts right now. And Ajanta Pharma is the other one, which is seeing an increase of 10% in open interest while the stock declines by around 2%. Let's take a look at stocks which are looking at seeing declines. And Infibeam will be at the top of that list. I'll talk about this one too. That's seeing a cut around 53%. So a lot of stocks out there to keep an eye on, Darshan, but I'm also seeing some surprising names like Canfin Homes and Jubilant FoodWorks advancing in trade today.
Yeah, okay. So there are three stocks that I want to talk about in more detail. First of all, look at Just Dial. It's not fallen as much as the other counters. It's down 2.3%. But I'm quite surprised by the open interest build-up that the counter has seen, almost 25% open interest build-up. So fresh shorts are being taken on high open interest build-up. So this I'll watch on the short side. I'm watching for ITC. It's managed to gain, I don't know what's it doing right now, but it's managed to move up on high open interest build-up. As we spoke earlier, that money seems to be moving back into the defensives. Today, oil as a pack is doing well because of GAIL and the tariffs that came out. But FMCG, after the big carnage, is seeing in buying. And ITC, in terms of valuations, is far cheaper than the other FMCG stocks. So valuations are reasonable. There seem to be much more move towards the defensive counters. And the third pack is basically these high beta counters, which were trading at record highs off till almost a few months ago. Now trading at fresh 52-week low. So Seat and Raymond, these are the two counters which are seeing fresh short positions in them. So probably I'll watch out for those counters. If the market carnage does manage to continue, there could be more traction on the downside for these two counters. But Agam, on your end, what have you spotted?
I also have a few interesting stocks, and KPIT Technologies is one of them. As I was suggesting, this stock has corrected 28% in the last 10 days. Do remember KPIT Technologies and NIT Technologies were the two stocks from the mid-cap IC space which had a phenomenal run. That was before the stock correction that these stocks have seen over the past few days. And as I've said again, it's lost nearly a third of its value, KPIT Technologies, from the peak at this point in time. We're seeing more shorts there. The other stock that I want to address is Infibeam. Now, this stock is another very curious one. In one fell swoop, you see a cut of 55%. That brings the total to 62% over the previous couple of sessions. And it's essentially the last 4 or 5 days when this stock has seen a tremendous move, upwards or downwards. But for now, it's now well below the mark of not only 100, but now it's at 90. So, and you know, that really hasn't been too much change in open interest, because I reckon a lot of traders will want to have to wait for stability, and perhaps there will be some conjecture about not knowing what to do with this one, but watch out for this. And the final one is Tata Steel. The cut here on Tata Steel is not as stark, but we're seeing a gradual slide in this one. And I talk about this especially because, you know, it's been one of the more stable ones, but this is starting to wilt a little as well. Again, not too much change in open interest, but this price action could likely lead to possible shorts in the future. So those are the three stocks that I'm watching out for today. That's all.
Okay, so we'll watch out for those counters, and we'll certainly ask our guests their views about it. But before we get our guest on the show, here's a reminder: if you have any queries regarding futures and option market, you can call us on 022-4540-4141 or write to us on Twitter, Facebook with the Ask BQ hashtag. So it's time to get in our F&O experts for the day. Ashish Chaturmohta of Sanctum Wealth is here in the studio with us, and Nirav Chheda of Nirmal Securities joins us on the show. Good morning to both of you, and thank you so much for joining in. So Ashish, since you're here, overall first your view on the Nifty, and is there any strategy that you have on the Nifty?
So, Darshan, good morning. You see, index has seen a very sharp correction in the last series, almost from 11,800 to almost 11,000 levels. Now there's some short-term index management is going on, I would say, because if you look at the advanced decline, it's pathetic. You are seeing stocks seeing heavy carnage, but despite that, index is somehow managing this 11,000 odd levels because IT is showing good strength, pharma is not correcting, few oil and gas stocks like Reliance, GAIL, they are making an uptick, so that is making index sustaining at these levels. But definitely if you look at stocks, there is a huge carnage. So considering that, there can be a pullback towards 11,100, 150, but that will be an opportunity to reduce your long exposure. And if you are aggressive, if you are aggressive trader, then ideally around 11,150, that would be a good area to short. That's on upside. Okay. Now what if it doesn't crosses 11,150 and breaks 10,900, then that will become a clear short opportunity, because that means market, after seeing a sharp correction, consolidated well enough at a lower end and now giving up the strength. So that will be a clear indication of weakness. So if you ask me, at these levels, nothing should be done at these juncture. Wait for a clarity, either at 11,150 it's a short, or on a breakdown below 10,900, that will become a clear short.
So would you recommend, let's say if our viewers are watching and they want to trade the index, would you recommend them keeping a selling stop loss at 10,900 because the market will crack within a matter of fraction, and they'll be able to miss it. So as a strategy, if you're saying that you see more carnage below 10,900, should they keep a selling stop loss on the
Yes, that would be the right approach, because then market will not give you an opportunity if you don't keep those sell orders. Or ideally, I think if you are a little bit aggressive, then creating a bear put spread will also make sense. Why not buying put? Because if there is a pullback of 100, 150 points, you might see a good loss in premium. So to avoid that kind of loss in premium, one should try to create a bear put spread strategy, buying a 11,000 put and writing a 10,700 or 10,600 put of October series. That can be a good strategy. But if you are index futures traders, then ideally 10,950 also can be kept as an...
And if that breaks, what levels are you seeing?
So I think then the carnage could be significant enough, because after seeing a sharp 800 points, and if you are again breaking the previous lows, then at least 300, 400 points from that level is something which is very easily possible. 10,700 is a area of 200-day moving average, but looking into this kind of correction, I don't think it's going to stop there. So I think easily it can correct till 10,400, 500 zone also. But for that, I'll wait for a clear breakdown of 10,900 levels.
Okay.
There you have it. So 10,900 is something that you're going to have to watch out for. That's according to Ashish. But Nirav, good morning to you as well. Before we get down to your strategy, could you just give us an idea about how you're also viewing the markets? I reckon you're also expecting at least some weakness in the near term.
Yes. Good morning, Agam. For Nifty again, the clear trend is a downtrend from current levels also. Just that, in between the expiry had come and the rollovers had to happen. So, as I said earlier also, the September series rollovers was very heavy. Nifty had about 2 crore 37 lakh shares odd. But this month Nifty has about 1 crore 67 lakh shares. So it is not that heavy in that terms. So if you look at the index, it doesn't have that much mileage to go down, very aggressively. The shorts have to be built up again, and then probably Nifty can go down. So I agree with the view that, some consolidation might come, probably a 100-200 point rally can come at current levels. But, the right way would be to sell on rallies, because the 50-day moving average has been broken around 11,300, and that will become a strong resistance on the upside. Every time, Nifty breaks the 50-day moving average in a long-term uptrend, it comes down to its 200-day moving average, which is placed around 10,800 odd levels. So around 10,800, it might again witness certain amount of consolidation, some support buying, but even I believe it will not stop there. Very likely it is going to come down further, and we are in for a longer-term downtrend, probably lasting 3 to 6 months.
Okay, so based on that, Nirav has a bear spread strategy that he's employing. So before we go to that, let's just explain what a bear spread strategy is. A bear spread strategy is employed when one expects a moderate down move in the security, or for that matter the index. In this strategy, a put option of a certain strike is purchased and a put option of a lower strike is simultaneously sold. So with that, Nirav, if you could take us through how you're employing this strategy and with what strikes.
Yeah. See, for October, I believe Nifty should expire below its 200-day moving average, anywhere in between 10,600, 700 odd. So, I will want to be, buying a bear put spread strategy at this moment, because there might be an imminent bounce which can come. I do not want to lose on premiums, that, like Ashish said. I'll be buying the 10,900 put option and selling the 10,650 put option along with it. You're only about paying 60-65 points premium on this. Now that is also my maximum loss. Now once even if Nifty comes up probably mid-October, I do not need to worry, because my max loss is only that much. Once it comes down again to 10,650, I stand to make about 180, 190 odd points. That is also my maximum profit. So looks like we are in for a expiry around the same level. So one should be booking profits when Nifty comes to around 10,650 odd.
Okay, then let's get stock specific now. Nirav, I'll stick with you. In terms of stocks, what are you recommending for today?
Yeah. See, there are two stocks. Both of them have broken very important support levels. I believe KTK Bank from current levels can go down to about 90, 85 odd levels. There is a clear, break of 100, which was a strong support. Every time it came there, it had witnessed good bounce from those levels. Now it has broken that and closed below the same. So I believe one can sell this with a stop loss of 105 on the futures. The second one is a sell on Motherson Sumi, and mind you, I had to change my stocks 3-4 times because there was so much selling in the market. I couldn't get more stocks. So Motherson Sumi has witnessed a breakdown below 280 odd levels and is continuing to witness a lower top, lower bottom formation. I believe this stock can go down towards 240, 235 odd levels in this expiry. So one can sell at current levels with a stop loss of 264.
Okay, so there you have it. Those are two short calls from Nirav. But Ashish, you have a mix of calls today for when it comes to stocks.
No, so see, we have to see whenever markets, irrespective of market, there are few stocks which are going to show strength, there are few stocks which are going to show weakness. So I think if you look at GAIL, you know, with a lot of positive news development, charts are also showing very strong trend, rollovers are very, very promising. This could be a, you know, contra bet in a market like this where you can see a good upside. So I think with a stop below 380, GAIL is something which is looking promising. 410, 415 is the target I am expecting in GAIL. Now if you look at in this falling market, there are few defensives like IT that is also showing a good strength. So here I think the risk reward is still favorable. HCL Tech is something which is looking promising. 1080 could be the stop loss. 1130 is a target I am expecting in HCL Tech. Now one weak stock which is looking very weak on all parameters. Technically it's a major breakdown. Heavy buildup of short positions, heavy short rollovers being carried to the October series. It's Jain Irrigation. Stock has broken a multi-month, multi-year, you know, support zone below 74. So I think this is a short. 74 should be the stop loss. On downside, I think 62, 63 is something which one can expect in, you know, Jain Irrigation. And I think generally, if you look at the PSU banking basket, that is looking extremely weak. Multi-year, multi-month breakdown has happened. Heavy short rollovers. So here I would like to initiate a trade through options rather than taking a vanilla short. So I think Oriental Bank of Commerce, this is one stock which is looking extremely weak to me, but I think it is already, you know, in a strong downtrend. So risk reward is not very favorable if you create a vanilla short, because stock might see a 3-4 rupees pullback and you might hit your stop loss. So ideal way would be to buy a vanilla put option of 60 strike price in Oriental Bank of Commerce. Until the stock doesn't crosses 66, ideally one should hold on to this put option of 60 strike.
There is no concern for liquidity in Oriental Bank?
No, because PSU banking basket in general have generally a good liquidity because of high trader you know, interest in these names.
Ashish, I just wanted to ask, you spoke about IT seeing strength. I think for the last 2 days we're seeing a little bit of weakness that's come in, at least in the mid-cap IT space. You saw how KPIT corrected. Mindtree is managing to hold on. You saw NIT Tech correct. Is there a sign of caution, any sign of caution that you're seeing on the mid-cap IT space?
Yes, you rightly mentioned, you know, Darshan, if you look at, you know, even Tata Elxsi, which is one of the highest, you know, very strong trend, but somehow it is also showing some signs of weakness. So clearly mid-cap IT to a great extent is showing signs of weakness. So I would avoid taking any aggressive bet. If I have to take an aggressive bet within the mid-cap IT, only one stock which is looking promising at this juncture is your Larsen & Toubro Infotech. So that is one stock which is into the cash segment that is showing some strength. But apart from that, I think most of the mid-cap IT is in a weaker trend. If I have to take a bet, that would be into large cap IT.
But what about a top short? In the mid-cap IT, because these counters have rallied significantly, so the value for someone to trader to make money is much more here. So if you had to bet on one top short on the mid-cap IT,
I think I'll go with NIT Tech in that situation, because you know it has seen a very sharp correction, heavy short buildup is there, and I think now 11, 20, 25 is going to be a key resistance. So keep that as a stop loss. On downside, I think 1040, 1050 is something which one can expect in NIT Technologies.
Okay. And Nirav, what's your view on the mid-cap IT space? Any long or probably any short that you're spotting that someone should do at the current market price?
See, you know, just to tell you, NIT Tech again was my sell call today, but you know, from 1120 odd, it went down to 1078. It hit the target before coming to the show, so I had to change that. I believe NIT Tech, the rollovers have been quite strong on the short side, so I believe it can come down further, at least up till 1000 odd level. So that is one counter one should be looking at. And also, you know, one very interesting observation that I've made is, you know, the IT space as a whole, the large cap space also, you know, the rollovers have been happening every month from the last 2 years, which have been very heavy and strong. But this month, you know, the rollovers have been very, very light. So TCS, Infosys, OFSS and some other names have witnessed very less rollovers. That means that, you know, the people who are taking long positions month on month have not rolled over positions, and that can be probably a dampener this month for IT. And probably, you know, along with the metals, IT will be one sector to watch out for, and probably Nifty can, you know, come down because of the IT space, I believe.
Okay, well, you know, Ashish, over the last 3 to 4 days, we've seen some very, very large moves in 3 stocks: Yes Bank, Diwan Housing Finance and Infibeam. There will be a lot of traders out there who will be, you know, who would want to perhaps put a punt on some of these stocks. One, what would your advice be? And secondly, would you ask them to absolutely avoid trades? If they can't avoid trades and they compulsively want to deal with just those stocks, what would you tell them?
So if they are compulsive, they have to pay the price for this. See, there's no option to it, because eventually we have seen whenever this kind of sharp correction comes, it's a tendency of traders to take up, and that stock has corrected 30%. Let's try for 5% or 7% gain. But I have never seen that strategy working out. Let it be the case of DHFL, Yes Bank. In earlier occasions, we have seen many such names which have seen a sharper correction and they have never recovered. So it's very, very difficult. You have seen that happening to Vakrangi, to PC Jewelers.
Right.
What has happened to these names? You have seen in 2008 what has happened to HDIL, Unitech, DLF. They have seen sharper correction. People ended up taking a bet, but eventually it doesn't pay off. So it's what I would suggest is, yes, there can always be a good or stronger pullback, but that is for those people who have long exposure. They should try to reduce their exposure in such kind of rallies. But any long traders should avoid these kind of names. There can be stronger pullback, but definitely not as long candidates.
Okay, let's take in some viewer queries that have come in on Facebook. Akash Suryavanshi wants a view on escorts 700 call. Nirav, what's your view on escorts? He wants a view on 700 call. I'm assuming that he wants to buy it, but what's your view?
Yeah, I believe we should not be buying it. Escorts has witnessed a clear breakdown, one below 800 and one below a very, very important level of 715. I believe, this breakdown is here to stay. It is going to go down towards the 600, 620 odd level. So I would say that one should be shorting the futures at current levels, keeping a stop loss of 690 and go for a target of about 600.
Okay, we'll move on to the next query. The next query was on YouTube from Imran Momin. He has a query on a bunch of stocks. So he has a query on DHFL. And Imran, Ashish has already suggested that you avoid taking a punt on DHFL at this point in time. Ashish has a short call on Gen Irrigation, considering the expected weakness that he sees. I'm going to ask, our Ask BQ show to take up queries on Edelweiss, but we can, however, take up queries on something like a Punjab National Bank right now, as well as NBCC perhaps. So let's pull up Punjab National Bank first and see where it's currently trading at. It's currently at around 61. This one, of course, again has come off largely in tandem with the public sector banks. So Ashish, what would you do with Punjab National Bank? What would you advise the viewer to do?
So I think entire PSU banking basket is in a weak trend, and PNB, if it comes to say 64, 65, that would be a good area to create a short position. 68 would be my stop loss, but yes, wait for a recovery rally to happen in these banks, because at these levels the risk reward is not that favorable. So 64, 65 ideally would be a good area to short. On downside, I'm expecting stock to hit eventually 58, 56 kind of zone.
All right, and the same viewer has a query on NBCC as well. Let's take a look at NBCC and where that's trading at. That is also at 61.65. Again, there's very little change in open interest. Nirav, can I direct this one to you? What's your view on NBCC, and what would you advise the viewer?
Yeah, see, NBCC is in a long-term downtrend. It is witnessing a lower top, lower bottom formation from quite some time. From sub 140 odd levels, it has corrected. Every time it comes to its previous bottom, witnesses some amount of consolidation and then again corrects. So this is the same thing that has happened in NBCC. It has now broken below its previous bottom, which was around 62 on a closing basis. So I believe it can now come down to 50 odd levels. So one can, go short in this counter with a stop loss of about 68, which is also a strong resistance on the upside, and expect about 50 to come.
Okay, pull up Jet Airways. Jet Airways is up 6% on decent open interest build-up. Open interest build-up of almost 5% at this point of time. Let's see what exactly is happening. I'm sorry, then I think I must be missing something. It's down 1.6%. But any view on Jet Airways, Ashish?
Again, a pullback trade. I think if any recovery comes towards 200, I think would be a good area to reduce any long exposure.
Okay.
All right. The next query is on Tech Mahindra, and again we have been talking about the relative strength of some of these IT companies and some of the large cap IT companies. Of course, we have seen substantial weakness in the mid cap ones. On YouTube, we have Vijay. And his question is it a good time to buy Tech Mahindra at current levels? Let's take a look at Tech Mahindra right now, so see where the stock's trading at. It's at 743. It's down 1% today. Very little change in open interest. Ashish, can I come to you on this one?
See, yes, as I mentioned, IT is in a positive, momentum, and I think Tech Mahindra is also a good bet. I think 720 ideally would be a good support zone, so keep that as a stop loss level. I'm expecting Tech Mahindra to cross the recent highs, which is around 780, 785 zone. So that would be my first target in Tech Mahindra.
All right. And our next query is from Siddhant, again on YouTube. And the F&O question that he has is on Biocon. Let's take a look at Biocon. Let's see where that one is trading at right now. It's at around, well, just short of 700, but it is weak today. It is down 2.2%. That's a spot price of 693. Again, very little change in open interest when it comes to the October futures. Nirav, if you could take this one, what would you advise Siddhant to do?
Yeah. His question is whether to buy or not, or he's holding on to
Well,
positions?
he just wants a view, so I reckon that he's not made his decision yet.
Okay. See, for Biocon and for the pharma sector, I'm quite bullish for this month. The roll-overs have been good and long positions have been rolled over. Biocon, for one, has reached near its all-time highs. I believe it is going to go up further. There's been some good volumes which has been happening in the consolidation that it was in between 650 and about 690. So I believe this stock can go up toward the 750, 780 odd levels. So one can be buying at current levels. You can keep a stop loss of about 655 for your longs.
All right. Well, with that, I'm going to ask our experts whether or not they have anything that they have observed over the last 15, 20 odd minutes and they'd like to talk to us about. So, Ashish, anything that stands out for you?
See, one thing is there, as far as the index is concerned, as of now, it is not showing any shorter term weakness. So yes, I think 10,950, as I mentioned, is going to be a support zone, and keep that in mind. There is a possibility of a pullback towards 11,100, 120 zones. So I'm talking of almost, from futures level, almost 80 to 100 points kind of pullback is possible. So avoid shorting at an index level at current levels. Wait for a clear breakdown to happen. If you are heavy, if you are a compulsive index trader, I think even a high risk trade of keeping 10,980 as a stop loss and going long will make sense. Shorting should be advised only around 11,150 levels. Apart from that, I think pharma basket is showing very good strength. So within that, Lupin and Sun Pharma, these are the two names where you can see a good uptick. I think a strong base is created. So 900 should be the stop loss in Lupin. I think a pullback towards 940, 945 is what one can expect. Same is the case with Sun Pharma. Strong base created. 620 should be kept as a stop loss. 655, 656 is something in a shorter term we are expecting in Sun Pharma as well.
Okay, so that's the view on Sun Pharma, but I think we have time to take just one more query, so I'm going to take it up. We have one on Britannia. We have Shivam on YouTube, and he wants a view and an opinion on Britannia at these levels. Of course, Britannia is the other one which has come off quite considerably from the recent highs that is made, which was well above the mark of 6,000, 6,500, 6,600 one point in time. A correction currently at around 5,700. Nirav, one, your view on Britannia and perhaps your closing thoughts at this time.
Yeah. See, Britannia, I believe, can bounce up towards the 6,000 odd levels. After breaking the 50-day moving average, it has reached its 200-day moving average. So whenever a stock really reaches the 200-day moving average after a long time, there is quite a bit of bounce that comes in and consolidation along with it. So I believe one can buy Britannia at current levels. One can keep a stop loss of about 5,600 for your longs. I believe Ashish has more or less summed up everything, so I don't need to really speak much. Even I believe that pharma sector is going to go up from current levels. There's been some good stocks which have bounced up after being beaten down in the morning. One among them is Glenmark. I believe Glenmark can really move up from current levels. It can go about 5-10% in this expiry itself. The second one is a short call. If you see Titan has broken below a very, very important level of 855. It has also, witnessed a head and shoulder breakdown. After the breakdown, it has retested its trend line on the upside around 850 odd level. So one can go short at current levels. I believe it can come down towards the 650, 700 odd mark. Probably can happen in this expiry itself. So one can keep a stop loss of about 855 for your shorts.
Wow, 650 to 700. That's another minimum 120 point cut. But, well, unfortunately, guys, we have run out of time on the show. So I'm going to thank both our experts, Ashish as well as Nirav, for joining us and taking us through their views as well as solving some of viewer queries. And with that, it's a wrap in this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg Quint Live.